Welcome to 3 and 3. Today we're going to be talking about small caps, emerging markets, and commercial real estate. So small caps. On September 18th, the Fed cut its overnight rate by 50 basis points. So now that discount window is 4.75 to 5%. Historically, small caps have been a prime beneficiary of lower interest rates. And small cap stock valuations have tended to increase compared to large caps after that first Fed cut. If you look at the cycle over a 12-month period after the first cut, 70% of the time small caps have outperformed, and by over 5% in outperformance. As you look at this chart, you can see from 1954 to the present, comparing the Russell 2000, the S&P 500, after the first cut, 70.6% of the time small caps have outperformed. Emerging markets. So lower US rates could help emerging market central banks maneuver, as their rates could actually come down now to fuel domestic growth. Around half of the primary 18 emerging markets have actually front-run the Fed. Well, those again are concentrated right now in Latin America and emerging Europe. History suggests that emerging and world stocks can rally if the Fed rate cuts helps the economy. Again, very important though, it needs to avoid a recession. If we do see a recession, that return is somewhat muted. As we look at this chart, you can see equity performance rests on whether the economy enters a recession. The green line is showing us the average performance of the MSCI World when the economy avoids a recession. And that red is if we see a recession in the world economies. Commercial real estate. So lower Fed policies are a necessary catalyst for reducing interest rates more broadly, including that CRE debt costs. Reduction in real estate debts costs have historically led to lower cap rates and again, price growth. Real estate companies can increase their investing activity and grow their portfolios, giving them more inventory to lease out to customers. The end result should be sales and profit growth. As you look at interest rates and compare it to commercial real estate, you can see that blue line, as interest rates have risen, commercial real estate prices have actually fallen. So as the Fed starts to cut, and again, we've had that 50 basis point move, the market's expecting another 50 basis points by the end of the year. And potentially by the end of this cycle of reducing interest rates, we could have the overnight rate below 3%. You may tend to think then commercial real estate, and we'll see if that happens, should actually start to appreciate from here. Thank you for joining us for 3 and 3.